Hi, I'm Ricky Cain, co-founder and president of Cain Realty Group with Keller Williams Realty in Austin, Texas. And welcome to Ricky's Real Estate Rundown, where I cover what you need to know about the greater Austin area real estate market in 4 minutes or less. All right, as usual, let's go over the last 7 days of activity within the greater Austin area real estate market. Over the last 7 days, there have been 703 new homes to come onto the market, and during that same time, 788 went under contract. This is now the third week in a row where we've seen more homes going under contract than homes coming onto the market, which is great. The average price for a home that came onto the market over the last 7 days is just over $672,000, and the average under contract price is just over $554,000. Then, on average, it took those homes that went under contract about 63 days to receive an offer. Now, in looking at the last 7 days of sold properties, these are properties that would have went under contract in maybe October or November. We can see the average days on market for those were 51, and the average sold price was just over $553,000. So very similar to the under contract average price currently. There are also 562 withdrawn or expired listings over the last 7 days, which is a pretty big number. These are listings that got removed from the market. Perhaps they weren't able to get the price they were looking for, or their plans had changed. The average price for an expired withdrawn listing is just over $816,000. And on average, those homes are on the market for about 95 days before they were removed. And just as a reminder of the last 16 years, we've actually been able to sell 99% of the homes that we listed that had expired with another agent for about 97.4% of the price that they expired with that other broker. It's not always about the price. Sometimes it's about the strategy or perhaps the real estate agent. Now, when we look at the price reductions over the last 30 days, I can see that 22% of sellers decided to reduce their price. The highest segment in terms of how much, we saw 35% do a 10 to 20% reduction, 30% do under 5, and 22% did 5 to 10%. Now, what does this mean for buyers? Well, I'll tell you, this is the last week for a finance buyer really to have an opportunity to close on a home and take advantage of getting the homestead exemption. It's also the last few days for an investor to close on a home that's financed to be able to buy a rental property and do a cost segregation study on that property, which allows them to wipe out a lot of their taxes that are owed for the tax year. Now, if you're a cash buyer or investor, you still have a few weeks because it takes, generally a week, week and a half for a cash transaction to close. And a lot of investors that we work with, they are buying a rental property every year so they can take advantage of that cost segregation study on those rental properties. And as a matter of fact, a lot of our clients wind up wiping out all of their tax obligations. So that's a great, great benefit for investors. What does this mean for sellers? Well, with the drop in interest rates, we've seen a spark in showing activity, which is great for listings. And this is a sharp drop from the peak of where we saw the interest rates just a few weeks ago. They came down about a half a point, which is a big deal. Also, in December and January, we tend to see a lot less inventory, but buyers are still flocking to the Austin area. So it's still also a good time to put on your home on the market. We're expecting one of the greatest inventory surges that we've seen in the last 10 years to start beginning in February and March of next year. So we're telling our clients to make sure you get your home on the market and priced right now so that you're not on when they are on. Obviously, if there are more choices within the market, buyers become pickier, they want to negotiate more, and ultimately the price could be lower. The last thing I want to talk about is a rate buy down. I've been getting a lot of calls and a lot of questions on how this works, and I thought I would simplify this for you. On a $500,000 sales price, let's say that you were able to get $20,000 off that price. That would save you about $147 a month in payment. If you use that same $20,000 from the seller and you had them buy down your rate, you save $419 a month in payment. If you have any questions about any of the content in this video, please call your favorite CRG agent or feel free to call us on our office line at 512-675-SOLD. Look forward to seeing you next Monday.